Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings and figure out what is really going on. Today, we're re-diving into Snap on Incorporated S latest quarterly report Form 10Q. Get ready because this one is packed with numbers and a few interesting moves they're remaking. If you love digging into the real financial story behind a company, make sure you are subscribed and consider joining our Discord community, linked in the description below for even more insights and discussions. Alright, let's jump right into the numbers from Snap on Incorporated S quarterly report covering the period ending the 27th of September, 2025. They filed their 10Q. This is essentially their report card for the last 3 months and the first 9 months of their fiscal year. Looking at the condensed consolidated statements of earnings, the top line shows their net sales for the 3 months ending the 27th of September 2025 were $1,190.8 million. That is up from $1,147.0 million in the same period last year. Over the first 9 months of the year, net sales were $3,511.3 million, barely changed from $3,508.7 million last year. Now, this slight increase in sales for the quarter sounds good, but let's see what is actually happening behind the scenes. Their gross profit, which is what is left after they pay for the goods they sell, was $605.9 million for the quarter. That is up from $587.8 million last year. Their gross margin, meaning gross profit as a percentage of sales, dipped slightly. They explain this is partly due to unfavorable foreign currency effects and some higher material costs, but they mention their improvement initiatives called Rapid Continuous Improvement, or RCI, helped offset some of those issues. This is pretty standard for businesses today, constantly trying to find efficiencies. The operating earnings before financial services saw a nice jump for the quarter. It was $278.5 million compared to $252.4 million last year. This is a good sign, showing their core business operations are becoming more profitable. They attribute part of this improvement to a significant legal settlement benefit. They received $22.0 million from a legal matter this year, which boosted their operating earnings. Without that legal settlement, the picture would look a bit different. And it is always important to see if the core business is growing robustly or if it is getting a boost from one-off events. Overall operating earnings for the company were $347.4 million for the quarter, up from $324.1 million last year. Again, a portion of this increase is tied to that legal settlement. For the 9-month period, operating earnings actually decreased from $1,013.8 million to $988.1 million. That is a dip of about 2.5%. This indicates that while the recent quarter showed improvement, the longer trend for operating earnings isn't as strong. Now, let's talk about the bottom line. Net earnings attributable to Snap on Incorporated for the third quarter of 2025 were $265.4 million, or $5.02 per diluted share. This is up from $251.1 million, or $4.70 per diluted share last year. So quarter over quarter, they are earning more per S-share. However, for the first 9 months of the year, net earnings attributable to Snap decreased to $756.2 million, or $14.24 per diluted share, down from $785.8 million, or $14.69 per diluted share. This reinforces the idea that while the latest quarter was positive, the year-to-date performance shows a decline in profitability. Moving over to the balance sheet, as of the 27th of September 2025, Snap had $1,534.1 million in cash and cash equivalents, up from $1,360.5 million at the end of 2024. That is a healthy increase in their cash pile, which is always a good sign for financial flexibility. Their inventory also grew, which could be a sign of preparing for future sales, or potentially a slowdown in sales if inventory sits too long. Total current liabilities were $996.8 million, up slightly from $961.5 million. They have substantial long-term debt too, sitting at $1,186.2 million. While this debt has been managed, it is something to keep an eye on, especially if interest rates were to rise significantly. Shareholders, equity attributable to Snap Unincorporated also saw a good increase, reaching $5,819.0 million compared to $5,394.1 million at the end of 2024. This is mainly driven by retained earnings and other comprehensive income, showing the company is growing its net worth. The notes to the financial statements provide a lot of the crucial details. For instance, they discuss revenue recognition and how they break down their sales by type and geography. They are telling us that about 90% of their net sales come from products sold at a point in time, with the rest coming from subscription services. This means their core business is about selling physical goods. Looking at their receivables, trade and other accounts receivable net of allowances was $925.7 million. This is up from $815.6 million last year. They also provide a detailed breakdown of their finance and contract receivables, which is a significant part of their business. When we look at their finance receivables, there is a category for delinquent amounts. For the 27th of September 2025, they report $67.3 million in finance receivables that are delinquent. This is a key area to watch. While it is a small percentage of their total receivables, an increase here could signal trouble for their customers' ability to pay, which could impact Snap on S bottom line. They also have a substantial amount of goodwill on their books, $1,105.8 million. Goodwill comes from acquisitions. It represents the premium paid over the fair value of identifiable net assets acquired. They do annual impairment tests, and so far, no impairments have been recorded, which is good news. But it is a large number, and any future write-down would hit earnings. In terms of their debt, they have several unsecured notes maturing in 2027, 2048, and 2050. The total debt is around $1.2 billion. They also have a large revolving credit facility that they haven't drawn down on, which is a good indicator of their current strong liquidity. They are in compliance with their debt covenants, which is crucial for maintaining access to credit. Now, let's look at management S assessment. They read generally optimistic, pointing to resilience and progress on their value creation processes. They expect capital expenditures to be around $100 million for the year, and their effective income tax rate is expected to be between 22% and 23%. Looking at their segments, the commercial Fadiamp industrial group saw a slight increase in net sales for the quarter, but operating earnings decreased. They attribute this to challenges in the Asia-Pacific business and increased personnel costs. It seems this segment is facing some headwinds. The Snap-on Tools group, which is a big part of their business serving technicians, had a modest sales increase for the quarter. However, their gross margin dipped slightly due to a shift in product mix, and operating expenses as a percentage of sales improved. This segment appears relatively stable. The Repair Systems CityAmp information group showed strong growth in net sales for the quarter, with both external and intersegment sales increasing significantly. Their operating earnings also jumped, partly due to that legal settlement benefiting this segment as well. This segment seems to be a key performer. The financial services segment had stable revenue, but a decrease in operating earnings for the quarter. This was driven by higher provisions for credit losses and increased personnel costs. They're seeing more potential risk in their loan portfolio, which is a common concern in tougher economic times. When we dig into their non-GAAP supplemental data, which separates operations from financial services, we see a clearer picture. The operations side, which is their core product business, shows an increase in operating earnings for the quarter, boosted by that legal settlement. But the financial services side, when looked at independently, shows a decline in operating earnings, again due to higher provisions for credit losses. For the operations segment, net earnings attributable to Snap on for the quarter were $265.4 million versus $251.1 million last year. This shows their core product business is doing better. However, for the 9-month period, operations net earnings decreased to $756.2 million from $785.8 million. This shows that the strong quarterly performance didn't completely overcome the weaker performance earlier in the year. Overall, Snap-on Inc. seems to be navigating a mixed environment. Their core product business is showing some positive momentum this quarter, particularly in the repair systems, CityAmp information group. However, the longer-term trend for operating earnings and the increasing provisions for credit losses in their financial services segment suggests some underlying challenges. Their significant cash position and manageable debt are definitely positives, offering some cushion and flexibility. However, the dip in year 2, date earnings, and the reliance on a legal settlement for quarterly gains are points to watch. They've got strong brands and a loyal customer base, but economic headwinds and potential shifts in customer payment behavior are definitely things they need to manage closely. Alright, that is our breakdown of Snap on S latest filing. What is your take on these numbers and what they signal for the company? S future. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.